All right, founders, welcome back to Founderama Live. All right, so in the previous live show on Thursday, I said this would be a weekly thing, which would be on Thursday. But okay, I'm having some feedback. Just bear with me. Done. That's fixed. Well, yeah, I'm getting the hang of this, right? Doing a live, and the thing is that I decided, you know what? Let's just do a live every day if I can, right? I know it's a bit of an ask because I travel quite a lot, and I also kind of have meetings and this and that. I do consulting. I create strategies. I manage projects. It's yeah. So it may not be easy to do a daily live, but I will try. Okay. So today's topic is very interesting. Funding AI startups. So I wanted to take this topic because when I was at our most recent kind of syndicate meeting with our family offices based out of the Middle East, I saw a tectonic shift in terms of what the family offices were looking for and what they want to look at going forward 2023. So, just to give you a bit of a context, initially, when we joined, this was back, I don't know, a few years back. Yes, tech, but it was the craze was wearable tech, health, the usual kind of a thing. Then 2020, 2021, and almost mid 2022, the craze was crypto, blockchain, things like that. But then you know what happened to crypto. So crypto has really become a bit of a poison pill, so to speak. It's untouchable right now. And so the most recent kind of meeting that we had with the family offices based out of the Middle East in Dubai and in Qatar, the family offices are asking us as startup advisors and also angel investors to sort of bring AI based startups to the table. So the new shiny object is AI, but I don't think it is just a shiny object. I think going forward, there's going to be a lot of influx of AI startups. There's got to be a lot of funding on the table. And if, at least a percentage of these startups are doing a good job at articulating their products and then showing and delivering results, then there's going to be even more funding. So in today's episode live, I wanted to just talk about a couple of different things. First, I want to take a look at the landscape of AI startups and the ones that have received funding, the big ones. And then I want to look at some talking points in terms of what to look out for. What are the pitfalls? What are the dangers if you're an AI startup when you're going to funding, right? Because my live shows are all about funding. Well, startup, funding, scaling, and then exits, but mostly about funding, seed funding especially. And so I want to talk about some of the pitfalls that you would have to keep your eye on if you're seeking funding. And then finally, I want to touch upon some strategies, so to speak, some benchmarks of what to do in terms of getting funding. And then I will leave the floor open for question and answers. Now, if you're on LinkedIn, I've left a comment with a link that you could use to click and then join me live. So you will come on to this video and you can then ask me questions. So if you want to participate, you can not just for questions, but if you want to add your 2 cents, your opinion, your if you have a rant, your experience, click on that link and then just jump in. Okay, so let me share my screen. Okay, and then I want to talk about some of the most recently funded. Okay, I hope you can see my screen. And these are artificial intelligence companies funded in the last 3 months. Of course, OpenAI is the top, right? 10 billion. Then you have Sandbox. Well, okay. These are in terms of the amount of funding. And you can see here a total of 15 billion has been invested in AI-based companies in the last 3 months. Mind you, these are just the companies that have sort of divulged or exposed, their funding rounds to Crunchbase. So there's many more that you would not know. Privately funded, so on and so forth. But if you look at these, the first one, OpenAI, is 10 billion. The next one is 500 million, right? So this is Sandbox AQ. The venture series is unknown. So we don't know if it's Series A, Series B. But then you have Anthropic at 300 million. And then you have 200 million, 175. It keeps going like that. These are the top 50. And if you go down to the bottom, 50th, Magic, it's 23 million. That's Series A. And there are 488 companies listed here. And so this is just to give you an idea of what's happening in terms of funding, right? The top 50 funding. So let's do the PowerPoint, the obligatory PowerPoint. I didn't want to do this, but then you know what? I have a tendency to jump around and I might go down a rabbit hole, and then before you know it, time is up, right? So I wanted to have a structured approach to this. Okay, funding AI startups in 2023. The first one, I want to talk about the importance of a strong team. Now, all these talking points are based on the last 2-3 months of startups, AI-based startups, startups in the AI sector that have sent pitch decks to me or my syndicate. They've come to our desk. We have analyzed them. Some of them, I've advised. Some we put in front of our family offices. 1 or 2 are in the process of going through that funding, and the rest not. So the numbers are really, really dire, right? Now, I know this is a topic for another day. I might do it maybe tomorrow, maybe the day after. But the number of startups that go in front of family offices, in front of angel investors, and the success ratio is really, really low, right? So if 100, personally, from my experience, if I get 100 pitch decks on my table, out of that, I might be interested in 10 of them. And if I put the 10 in front of the family offices, 1 may, move forward. So, okay, so importance of a strong team. While having a promising product is important, having a team with diverse expertise and a track record of success is essential for AI startups to secure funding. Investors want to see that the team has the necessary skills and experience to execute on their vision. What does that mean? Okay, a lot of startups or pitch decks that I get, when I see they're made up of tech teams, mostly tech teams, and that's okay because this is AI is tech, right? And by the way, in this video, in this live show, I'm going to be really speaking, I will try and be non-jargon, right? Because this is for everyone. These videos are not just for the AI startups, but this is for everyone. And so I will try and my best not to use jargon. So anyway, going back to this point, what I notice is that the teams are predominantly biased towards tech personnel, right? Tech members. And there's a problem with that because family offices, investors, angel investors, they would like to see a diverse kind of a mix in the teams because tech guys are important, tech girls are important, tech team members are important, but a business is successful not just because of the founder's ideas or the tech that is, the product. You also need advisors or partners or board members that understand finance, that understand product cycles, that understand going to market, marketing, strategy, so on. So this is very important. A big mistake that I see AI startups is when they send out a pitch deck to an investor, the team slide or of the deck is really biased, right? So think about it. See if you can bring in one or two team members that are, that would balance the tech part, marketing, going to market, finance and all that. Now, I'm not saying go and hire these people just for the sake of getting the funding. No, that's not what I'm saying. I'm talking about the startups that actually do have these team members, but they don't put them onto the slide deck, right? And you can also get advisors that would balance this out, right? So you don't need to hire, full-time people because maybe you're bootstrapping right now and you're going to, you're going to seed funding round, and so you don't want to hire people just for that. So in that case, you can then maybe bring on someone as an advisor that you pay a retainer, and that's it, right? Okay, the next one, the role of explainability. One of the biggest challenges facing AI startups is the issue of explainability, right? Investors are focused on understanding how AI algorithms make decisions, which means startups that can provide a clear and transparent explanation of their technology will have a competitive advantage. Okay, just in the last 2-3 weeks, I was so frustrated with some of the pitch decks that I got, which looked good on the surface, but they took slides and slides and slides and to just explain what their product end game is. Because look, at the end of the day, investors, yes, they want to understand the tech part of it, and it's good to put some tech part of it, but explain it simply and clearly what the end game is, and then put the tech part into the appendix, right? So at the end of the slide deck, pitch deck, you could have a few slides where you go into detail, or have a separate tech deck, right? And if the startup is interested, send them that, offer them that. So in the slide where you're trying to explain the tech in simple terms, what the end game is. So how is this going to be useful? Who is this for? Of course, but bring on a little bit of tech into it and say, how would this algorithm, give an analogy, and then have an asterisk and at the bottom say, if you want the full details of our tech deck, just ask for it. And if you need an NDA for that, just say, click here, let them sign an NDA, and then they can download that tech deck, right? This is very important. Number 3, the benefits of vertical specialization. AI is being applied across many industries, from healthcare to finance to logistics, right? Investors are looking for startups that have a clear understanding of the unique challenges and opportunities within a particular industry and are able to develop customized solutions. Okay. Now, this one is, neither here nor there, because a lot of the pitch decks that I see, yes, they understand their industry sector, and of course their product or the venture is to solve a particular challenge, right? So, but I also see pitch decks that are generic. Maybe the product is generic, right? So it could help marketing, let's say, the marketing sector. Now, you got to really show vertical specialization. So if it's marketing, then not just the problems you're going to solve in that marketing, but also extrapolate that into other sectors and bring it back to show specialization within the sector that you're targeting. So if it's finance, talk about the finance sector, the challenge, compare it with an analogy with a different sector, and then come back to your sector and show stats and, things like that. So specialization is very important. Okay, guys, this is a live show. I'm not looking at comments yet. So if you're posting a comment on LinkedIn or YouTube or Twitter, this is on Facebook, this is going live on all these channels. I'm sorry that I'm not recognizing your comments, and I will. Once I'm done with this presentation, I will then look at the comments. All right, number 4, the dangers of overhyping AI. Okay. While AI has the potential to transform many industries, there is a danger of overhyping its capabilities, right? Startups that are able to demonstrate a realistic understanding of what AI can and can't do and the specific ways in which their technology can add value will be more attractive to investors. Okay, what does this mean? What this means is that, yes, you in your pitch deck, in your presentation, to a family office or an angel investor like myself, it is, yes, you need to show enthusiasm for your particular venture, your startup, your product, and what AI can do in terms of solving problems for your target audience, so on and so forth. Be careful and balance it by talking about what AI can do in general, what your AI can do, and what it can't do, right? So don't think that investors will just be excited by this utopian kind of AI is gonna fix it. Our product, our algorithm can then do this and that. Be careful with that, right? Of course, I know you will be careful. You will only talk about the actual things that your AI can do. But I've seen, I would say, 6 out of 10 pitch decks that I got. Sometimes the enthusiasm can get the better of them, right? And that's going to put off investors, because investors it's about reality. It's about transparency. So be careful with this. Number 5, the importance of data privacy and security. Okay, this is a bit of a straightforward thing. With increasing concerns around privacy, security, investors are looking for startups that prioritize these issues. So if you don't have a slide that talks about how you're going to deal with your commitment to protecting user data and preventing breaches, then you can kiss goodbye to your funding, right? Because startups that can show this are more attractive to investors. AI, we are at the cusp of this massive wave, right? We don't even know how AI is going to look 6 months, a year down the line, 2 years, 3 years, right? And so as much as the potential for greatness, there's potential for disaster. This could be privacy. This could be breaches, hacking. You know what I'm talking about. So think through. If you haven't already thought through, then actually you shouldn't be seeking funding yet. This should be a big part of your AI drive, right? And I'm sure you're doing it. If you're not, then okay, you have bigger problems to think about, and forget funding, right? You'll be in big trouble. So mention this in your pitch deck. Have a slide that talks about the commitment and not just flowery, right? Don't just say, oh, we care. We care about it, but how, right? What measures are you taking? You don't need to go into specific details, but you do need to talk about it and say, we are taking, okay, our AI, blah, 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 we're doing this. but we also have a silo, we have a moat, we are careful with this, all that. Number 6, related point, value of ethical considerations. As AI becomes more pervasive, there is a growing need for ethical considerations around its use. Investors are looking for startups that are committed to developing technology in an ethical and responsible manner and can demonstrate a clear understanding of the potential ethical implications of their technology. What this means is that you need to communicate to the potential investor that you understand the potential for ethical malpractice, right? Because there is in every sector in tech, especially in AI. Just talk about it and show your commitment towards that, and that would make investors happy. But listen, guys, when I talk about these things, right? Don't do it just because it'll make investors happy. Investors are not fools, okay? Investors are not fools. And if you're working with angel investors or investment advisors or startup advisors, you got to be genuine in your communication, right? Because they're the ones who will put you, if it's angel investors, okay, they're direct, but sometimes angel investors also have, they may be in a syndicate, right? So they're going to take your venture and put it in front of, the bigger kind of pot. So be genuine, be authentic. All right, let's quickly go over some funding strategy notes. These are the usual things. These are applicable to every startup that is seeking funding, but here we'll talk about it from the AI startup perspective. Develop a clear and compelling pitch. I mean, duh, right? But it's more so because the AI, you may be tempted to really lean heavily towards tech or jargons and this and that. But try and make it clear, and it has to be compelling. Create a realistic financial plan. Now, with AI, the potential is that you could be talking about a TAM, the market space, and pulling numbers and, billions and trillions. No. Have a realistic financial plan, okay? Even if the market you're going for the TAM is, 100 billion, right? And then say, out of that, it's going to be 10% we're going to go after. Be careful with that. If it is truly that, that's okay. But it's never truly that, right? I have a lot of experience with it. Trust me. And there's a lot of bullshit that comes out. And, investors, they have a nose for bullshit. And when I see a slide, in a pitch deck that's talking about some random numbers, I sometimes I just close the pitch deck. Because, look, ideas are aplenty. There are ideas all around. Ideas are not a big deal. If you have a great idea, good for you. That's no big deal, okay? Reality is more important than an idea, right? You may have an idea for a teleporting machine, but you know what? Hey, reality is that the technology in this world is not ready for that idea. You see what I'm trying to say, right? So yeah, realistic financial plan. Build a strong network. Okay, so AI startups, what I've noticed is that they're really working in silos. And you need to build networks. You need to, on LinkedIn, on Twitter, wherever you are, create brotherhood with other founders within the AI sector. Don't think of them as competitors. Think of them as brothers or sisters. Brotherhood, sisterhood, whatever it is, right? So build a strong network. And also build a strong network with players within the bigger players within the bigger ecosystem of the AI startup thing. Focus on building an MVP. Okay, of course, this is again a duh, but I tell you, so many pitch decks that I've seen just recently, last week, they're asking for $2 million seed funding, which I was like, what? Okay, yeah, it's been done before, but they don't even have an MVP. They're working on the MVP, which is okay. But listen, before you go for funding, you need to have an MVP. And a lot of these ventures, the founders think the MVP needs to have this X number of features. I mean, without that, we don't have an MVP, and we don't want to wait to go for funding because, look, an MVP can be just 2 features, 3 features. It's okay. And again, investors are not fools. They're not children, right? It's not like you're trying to show them candy. Okay. Be flexible and adaptable. Okay. In your pitch deck and in your presentation, show that you are flexible and adaptable. That means you can pivot. What that means is when you present a business plan, in your business plan, also show contingencies, show a plan B. Say, if this path doesn't work, our algorithm, we can pivot to this market. Founders might be thinking, okay, hang on, Mash, hang on. If we show that we're not showing confidence in plan A, and the investor might think, okay, these guys, no, like I said, investors are not idiots, right? They will understand. In fact, they will love you more because now they think, oh, okay, these guys are real. They understand what this game is about, right? And they have thought through a contingency plan, which means if we invest in these guys, our money, the risk is lesser. Demonstrate traction. Again, you may have traction, you may not, but try and build up some traction. And you know what? I'll do a live another day on how to build traction when you don't have customers, and how to show traction. I may do. It's actually a very it's a paid for kind of advice, but I might touch up, and give you a few hints. All right. Okay. Gaff. Be transparent and honest. Okay, this is not just for AI. It's for everyone, but more so for the AI sector. Be transparent and honest. Okay. Have a clear plan for the use of your funds. Again, I cannot emphasize this enough. When you're asking for $500,000, when you're asking for $300,000, when you're asking for $100,000, always show how the funds would be allocated. And not just a pie chart. Yes, have the pie chart with, showing 30% would be for recruiting, new developers, a lead architect. Okay, 20% for a marketing, manager, or whatever, marketing guy, gal. Yes, but also have a table that breaks down, that shows the runway and the burn rate. All these things. Be very clear in how these funds are going to be used. All right, so that's the presentation deck for now. Now, let me just quickly take a look at what's going on. If there is anyone asking, Simon, hi Simon. Hey Darminder, how are you? Okay, question for Amy. How important is that? Okay, so there are some questions. I'm gonna also quickly take a look at what's happening on YouTube. Okay, and let me go to Twitter. And let me see. Bear with me, guys. I'm just quickly looking at Twitter to see if there's any comments on it. Okay, so let me go back to LinkedIn. So we're entering into AMA. Ask me anything kind of a thing. So Simon says, question for AMA, how important is it that AI is actually their AI? I mean, they actually made it, not reuse someone else's. Okay, very good question. The pitch decks that I've seen, and like I said, always I try to answer from my experience, right? Because yes, I also know the generic kind of idea out there, but I would rather focus it based on my experience. And may not be a big experience, but it is my experience, right? Okay, so in the last 2-3 months, the pitch decks, I've probably seen about 70 pitches. and a lot of great ones. I would say that majority of them are reusing or piggybacking on top of existing frameworks, whether it's OpenAI or Frame AI, or lots of others out there, and they are piggybacking on that. For instance, healthcare. I was just looking at one a couple of days ago. Very interesting idea. And by the way, yes, I have NDAs, so I can't really talk about them. But they were, they had a combination of OpenAI and another framework, and they built their algorithm to utilize these two. So it could be an amalgamation of technologies, right? Frameworks and platforms. It doesn't have to be from scratch, but there are, some of the ideas that are from scratch. I saw one the other day. This is for, automated driving, but it's a driver assist. But yeah, it's from scratch. It's a brilliant idea. So to answer your question, it doesn't matter. It doesn't matter. What matters is the end result of your algorithm. What is it that you're solving, right? What is the pain point you're solving, and who is your target audience? As long as that is, and a follow-up question might be, well, if we're using, let's say, I don't know, OpenAI GPT, because that's now the hot one, and then we're producing something, can't someone else, do the same and copy? Yes, there is an issue there, because investors are going to be looking at your venture and say, we're going to fund this. It's going to come out into the market, and then somebody else could look at it, reverse engineer this, and then do the same. Well, this is for anything out there, unless you patent your algorithm, right? And that's a whole different topic for conversation for another day. But I hope that answers it. Okay, Darminder, AI has some biases built in, like the master. We see magic, but is not Harry Potter. Yeah, absolutely. AI is nascent. At the moment, you have solution-driven AI and ventures. Then you have the visionary AI ventures. And you'd be surprised. I've seen a couple that were completely visionary. Great ideas, but not for now. And, putting money into those, yeah, there's so much risk that not a single investor would come forward. But you also need such visionary products or ventures, because yes, they try and push the envelope, and but investors are very choosy, right? They're very careful because it's about investment, and that's return on investment, and that's why I like family offices, and because yes, they also want a return on their investment, but they're also more relaxed. The more willing to sit back and let the startup play out and take some time if it's a visionary kind of idea. All right, so what else have we got? Not much. Well, we passed the half an hour, and I'm trying to keep these live episodes to 30 minutes. But then if there's lots of people coming in and asking a lot of questions, then I might do up to an hour. So I'm blocking an hour of my time on my calendar, but initially I'll just do 30 minutes, and then, okay, Darren. Hey, Darren. If your startup uses AI, but it is not forefront of the application, is that attractive? Absolutely. So when I say AI-based ventures, a lot of them, okay, maybe not a lot of them, 30 to 40% are actually not just AI products, right? They are using AI, but their end game is something else. But AI is such a big part of their vision, their workflow, and the solution that they're using that AI component to attract investors. So if you're using AI, but a word of caution here. Just because you're using a recommendation engine don't call yourself an AI product, right? Or rather, don't try to leverage that as a big part of your. No, just be careful, because recommendations and suggestions and a chat bot, they're not big deal, and investors will see through that. They'll look at it and they'll say, get lost. So yes and no is the answer. But it's a great question, Darren. Thanks for that. Darminder says AI also needs an endpoint. You can go to a judge. You can go to a judge to get it right, but AI tech has not a judge. Okay, let me try and understand that. So Darminder, what are you saying? You're saying that AI also needs an endpoint. So yes, okay. It's not be all end all, if that's what you're saying, because AI is going to be used to solve something, right? So absolutely, I agree 100%, Darminder. You're right. And because even ChatGPT, right? What is it? It's solving certain things. So you're right. It's not the be all end all. It needs an endpoint that is an end game that solves something. All right, guys. That's it. Let me see if there is any questions on YouTube. Nah, it's just crickets. And then on Twitter, crickets again. So I think that's it. But anyway, you know what? You know where to find me on LinkedIn. If you're watching this video and it's not live, you can find me on LinkedIn. You can find me on Twitter, Mash Bonigala, Bonigala, and you can. Let me see if I can put something up here. Yes, I think you can see this. It's Bonigala on Twitter, and LinkedIn is also Bonigala, right? So search for me and come and hit me up, ask me questions, and I will try and answer. Now, tomorrow I'll be back. I'm not sure what the topic is. I haven't prepared. Like I said, I did a few slides. I'm going to take probably half an hour just before the live show to put some slides together. So this is freestyling, right? It's going to be freestyling. I'll try and do it every day. If I'm bored on one of these days, or I got work or I got a call, I may not. So don't hate me. It's just going to be a freestyle thing. All right, guys. Thanks for coming on this live show. For the next one, I hope someone in the comments can click on that link and then join me. Don't be shy. Come on. And then it'll be more interesting, right? All right, guys. To the next live show, which is probably tomorrow, go forth and prosper.